This is your LMAX exchange technical update for Friday, November 17th, 2017. Euro dollar. So the euro rallied up this week, but didn't quite rally enough to take out that right shoulder of what is a head and shoulders top at 118.80. And so this leaves the market in a neutral state and possibly still considering the downside. So a lower top is possible here ahead of a resumption of declines. At the same time, the market, while back above 1690, did take the immediate pressure off the downside. So again, a bit of a neutral state right now. Key levels to watch over the coming sessions to see how the market reacts. Look to see if the market holds above 1690 on a close basis. Look to see if the market holds below 1880 on a close basis. If it breaks and closes above 1880, then it looks like we could see a resumption of the uptrend in 2017. If it breaks and closes below 1690, it could set the stage for a deeper drop down below the recent 1555 low, putting that head and shoulders top objective down at 112.30 back in play. Sterling dollar. This market continues to chop around. We've seen a lot of consolidation. We need to see a break above 33.40, the recent consolidation high, or back below 30.25 for a clear short-term directional insight. However, longer term, the uptrend in 2017 is very clear, and if we do see setbacks, they're expected to be supported by 127.75, a previous breakout level, in favor of a continuation of this uptrend, eventually back above 136.60, where the 2017 high is, and towards and through 140 further up. Dollar yen. So dollar yen has had a hard time establishing above the 114, 115 area in 2017. The market has been confined to a choppy range trade, most recently stalling out yet again up above 114, setting the stage for a possible resumption of this trend here, which is a range trade, which would imply that the market could see downside to as low as a return to the retest of the 2017 low that was seen back in September at around 107.30. It would take a break ultimately here back above 115.60, some range highs from earlier this year, to suggest that this market is done with the range and ready to break higher. Of course, on the downside, a clear break below 107 would do that. Euro Swiss is continuing with its ascent in 2017. The market wants to continue to push higher, eventually looking to retest that previous base at 120 that had been supporting the market for so long up until January of 2015. If we do see setbacks here, they're expected to be supported, well ahead of 112, and only back below 112 in this market would compromise a constructive outlook. Aussie dollar. So Aussie dollar has been in a decline over the past several weeks since topping out by a plus 2-year high above 81 back in the month of September at 81.26. Since then, it's been a decline. The market is now coming down to some key psychological support in the 75 area. At this point, there is risk that we see a bit of a bounce given the extension that we've seen to the downside. However, the pressure overall remains on the downside. If we do see a rally here, it should be looking for a lower top in favor of a continuation of declines. Only back above 79 would compromise this outlook. Dollar CAD. So dollar CAD is trading within a consolidation right now, but overall the market has entered a period of recovery since bottoming out by the 2017 and plus 2-year low down in September, just shy of 120. And the market now should be looking to consolidate ahead of a continuation of this recovery back towards 130. Look for setbacks to be supported in the 126 area, and only a break back below the 124 handle would compromise this outlook. Kiwi dollar. So the New Zealand dollar has been unable to retain much of a bid tone over the past several weeks. The market now is looking to potentially consider a drop below the 2017 low at 68.18 from back in May, which was matched actually just a few weeks back in late October. If the market breaks down below 68.18, it could open the door for a deeper drop towards the 65 area. At the same time, given the extension that we've seen, there is risk for a bounce that could take us back towards the 71 handle. But even then, the market would be looking for a lower top for a continuation of declines, and only back above 72 would compromise the bearish outlook right now for Kiwi dollar. SPX 500. The S&P 500 has been showing potential signs of wanting to top out, but we've seen this many times before, and we need to see some confirmation, even though medium and longer term technical studies are screaming out for a major correction. For that to happen, at a minimum, the market needs to establish a close back below 25.44. And then really the market would need to establish below 2,500 to suggest that we're seeing some form of a top. Until then, the pressure does remain firmly on the top side, and there's continued risk for upside extension to fresh record highs into the 2,600s. Gold. So gold, a lot of chop, but mostly putting in higher highs over the past several months and well supported on dips. And so look for this latest setbacks to be supported in the 1250 to 1260 area in favor of the next major upside extension here back through the 2017 high that was set just back in September at 1357, and then towards and through the 2016 peak at 1375. Only back below 1200 would compromise the outlook for gold.